Imagine waking up one morning to find your car smashed by a fallen tree, or your house flooded after a storm, or worse, facing a medical emergency that could cost thousands of dollars. What if you had to cover all that from your own pocket? That's where insurance steps in and saves the day. But how does it really work? If you're new to this world, don't worry. Today, we're breaking it all down, simple, clear, and beginner-friendly. Welcome to your ultimate beginner's guide to how insurance works. Let's start with the basics. At its core, insurance is a financial safety net. It protects you from big, unexpected losses by sharing the risk with others. You pay a small amount of money regularly, called a premium, and in return, the insurance company promises to help cover the cost when something goes wrong. It's like pooling money with a large group of people. Most of the time, nothing bad happens to anyone. But when someone does face a loss, the money from the pool is used to help them recover. So, who are the key players here? First, there's you, the policyholder. You buy the insurance policy. Then there's the insurance company, often called the insurer. They issue the policy and manage the risk. And finally, there's the insurance policy itself, a legal contract that outlines exactly what's covered, what's not, and how much the insurer will pay in the event of a claim. Now, let's go a bit deeper into how it actually works. Let's say you buy car insurance. You agree to pay $100 every month to the insurer. That's your premium. If one day your car gets into an accident and it costs $5,000 to fix, the insurance company steps in to cover most of the cost, minus something called the deductible. This is the amount you agree to pay out of your own pocket before the insurer pays the rest. So, if your deductible is $500, you pay that first, and the insurer pays the remaining $4,500. The same logic applies to other types of insurance: health, life, home, even travel insurance. You pay premiums, and in return, you get coverage for specific risks. Let's take a real-life example. Imagine Sarah in Toronto. She's 28, works as a freelance graphic designer, and recently got her first health insurance policy. One month, she ends up needing emergency surgery, which would have cost her $20,000. But because she had insurance, she only paid a $1,000 deductible, and the insurer covered the rest. Without insurance, that bill would have set her back years. Now, let's talk about types of insurance you're most likely to encounter. First up, health insurance. This covers medical expenses like doctor visits, surgeries, hospital stays, and prescriptions. In countries like the US, health insurance is absolutely critical because medical care is expensive. Next, auto insurance. If you own a car, this is often legally required. It covers damage to your vehicle, injuries to you or others, and property damage in accidents. Then there's homeowners insurance or renter's insurance, depending on whether you own or rent your home. These protect your belongings and property from things like fire, theft, or natural disasters. Life insurance is another important one. It pays a lump sum to your beneficiaries, usually your family, if you pass away. It's especially useful if others depend on your income. And let's not forget disability insurance, travel insurance, and even pet insurance. There's a policy for just about every risk out there. But how do insurance companies make money if they're always paying out? Great question. It's all about risk management. Insurance companies use complex math and data, called actuarial science, to predict how many claims they'll have to pay out in a year. They set premium prices high enough to cover those claims, plus administrative costs, and still make a profit. Also, not every policyholder will file a claim. In fact, most people don't use their insurance every year, so the money collected from premiums often exceeds what's paid out. So, how do you choose the right insurance? Start by assessing your risks. Do you drive a car? Then auto insurance is a must. Do you have dependents? Life insurance is worth looking into. Are you self-employed without employer coverage? Then health insurance should be a top priority. Also, always read the fine print. Know what's covered, what's excluded, how much the deductible is, and what your premium will cost. Shop around, get quotes from different companies, and consider working with a licensed insurance agent who can explain the options in plain language. One common mistake beginners make is going for the cheapest policy. But cheaper isn't always better. You might pay a low premium, but have a high deductible or limited coverage. And when the time comes to file a claim, that could hurt you financially. Instead, look for value, a balance between affordability and strong coverage. Let's wrap this up. Insurance can seem confusing at first, but once you understand the basics, it's really about protecting yourself from financial shocks. Whether it's a car crash, a house fire, a hospital bill, or something more serious, insurance gives you peace of mind. It's one of the smartest financial tools you can use to protect your future. So if you found this guide helpful, don't forget to hit that like button and subscribe for more simple explanations on money, insurance, and financial planning. Got questions or want us to cover a specific topic? Drop a comment below. We read every one. Thanks for watching, and we'll see you in the next video.